everyone. Welcome to yet another weekly analysis. For this week, we are going to be talking about the dollar. We've always been trading the dollar, because it is basically the most powerful currency in the world. It is basically how everything else is priced. So you want to be, involved in the dollar. It is very, very important. You should not be. I wouldn't tell you what to do, but it's not advisable to, look into the Euro CHF and those pairs. But be that as it may, the dollar is the most powerful pair in the world, or rather the most powerful currency in the world, and you want to trade that because it moves precisely, it moves nicely, in as much as the fundamentals are a bit shaky, but it is also easily maneuverable. You can avoid losses with certain plans in place, like a break of structure before your entry, or a break of counter trend line before your entry, right? So these little things help you mitigate losses. You may not strike your losses out completely, but they mitigate losses, right? So for this week, we're going to be focusing on the dollar. This week is the last week for the month. So we are expecting something to happen. What we're expecting was something to happen. Now, I'm going to show you what I mean by we're expecting something to happen, right? So the US dollar right now is in the range, coming up, coming down, go up, come down, go up, come down. So we're expecting ourselves, or rather, we're expecting the US dollar to make its way down here. We're in this little range right here. On the weekly time frame is a lot more, pronounced. You can see it's a lot wider on the weekly time frame, like so, right? So we're expecting, we've been in this nasty range. Now it is also possible to trade a ranging market, but I wouldn't advise it. But if you know what you're doing, especially when you're trading from the highest time frame, like the monthly time frame, the weekly time frame, then yeah, a ranging market is easily maneuverable. So what I'm trying to say is this, right? This week, right? I need you to understand one thing, right? We've all heard of this saying that history repeats itself, and in trading, we have nothing to predict the future off of but history, but the past. Meaning, look left, right? So just look left, right? So this week, right, we're expecting where we noticed the pullback last week, right? Last week we noticed this weekly time frame pullback like so, and then we obviously know that you must wait. Very, very important, very, very important, right? You must wait for a turnaround candle. Now I need you to understand this. You may not see this on the courses, right? But you will see this on the candlestick bible. So I'm saying to you by Richard Nelson. You should read the first one, not the one in in colored. There's another, right? To read that one, it talks more on reversal candles. It's what I'm saying to you. In as much as the new one talks about reversal candlesticks, so reversal patterns, but this one talks about reversal candlesticks themselves. When you see a market, right, or the charts make a huge moment, a huge push to an area of interest, you shouldn't sell immediately. Oh, it has gone into my area of interest, you sell. No, a lot of people took losses last week. I didn't, because I didn't trade. All I need to do is place one or two trades a month and I'm good. You see what I'm saying to you? But anyway, moving forward, you shouldn't wait. You shouldn't execute the moment we get there. You should execute after you've seen a reversal candle, a reversal pattern form up. It tells you, the market tells you before it does anything. The market will tell you before it does anything. So what I was expecting for what I was expecting to see on the weekly time frame before I execute or before I look for entries, I was expecting to see a reversal pattern, a reversal candlestick. Just like so, if you notice, right, just like I said before, history repeats itself. It came down, it went up. We had this huge pullback, and then we had this this hanging man. It's called a hanging man, right? If it's upside down, it's called a hammerhead. But we had this hanging man like so, right? And then after this hanging man is a very, 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 very important reversal pattern, reversal candle, right? After this hanging man, a huge push to the downside, and that is what I'm expecting this week. Just in this 1 week, I'm expecting this huge push to the downside. Now, it may not happen, it may happen, but I know that I have, it has happened before in the past, and that is all I have as a trader to be able to predict the future. Now, for the dollar, right, it has done the exact same thing. You see a doji, right? Any candlestick that has a small body and a very long wick at any side, either the upside or the bottom side, it has a small body and a long wicks, long shadows in this case. you must understand that these are reversal candles. It's what I'm saying to you. These are indecision candles. This tells us, okay, I've gotten to an area of interest, or I've gotten to a U-turn. Now I'm slowing down. Now I'm making my U-turn. So I need you to what? Be prepared. Now, if you go to the lower time frames, like the 4 hour time frame, the daily time frame, you start to see reversal pattern like a double bottom form up, a double top form up. It's what I'm saying to you. Now, all I am waiting for right now is an execution. I have waited for everything I need to wait for. I've waited for the pullback. I have waited for the candlestick to form up to tell me it's about to, the reversal is about to take place. I have waited for the most intricate part of the trade, right? So now, excuse me, all I need to do is to what? Execute. That's all I need to do right now. Execution is what the most important. Now, in as much as you know the direction, it's also very important. This is why it takes years to master, right? Or to master yourself and your plan, right? Because I don't think one can fully master the market because it evolves. It's what I'm saying to you. Anyway, in as much as you know the direction, it is very, very possible to take a loss because you may enter at the wrong time, you may enter too early, you may enter too late or whatnot. But what we're expecting right now is this. This is what I'm expecting. I have journaled my plan. I know what I'm looking for right now. Let's go to the euro dollar because we're done with the DX. So let's go to the euro dollar where we are actually trading on. We're trading the euro dollar in this case. Now, this is what I need to happen, right? Like I said before, when you see the candle form up, right, the little body candle form up, it tells us, okay, I'm about to reverse. Be prepared for an entry. Now, I can see a double bottom just like so, right? A possible double bottom. Excuse me. I can see a possible double bottom, lower lows, lower high, and then these equal lows like so, right? We need the market to break this neckline. Excuse me. We need the market to break this neckline, thereby also closing above this support we have right here, this 1.16000 area right here, right? We need a close above. And by the time we get a close above, right, I would place my stops underneath here, like so. I'll place my stops underneath like so, and then I'll execute from the neckline, right? Just like so from the neckline. Now I trade from zone to zone. That is how I trade from zone to zone, right? The market moves from zone to zone. So my entries will be right here. Even if the market decides to like go up about close way higher than the neckline, I would set a limit because I will expect it to come back. I do not chase. I set my limits and I wait for it. I prefer setting limits because they help me, they prevent slippages in the market. But anyway, yeah, I'll set my stop around here or wherever, and then however you do yours, and then my take profit will be a 2 to 1. Basically, I'm looking for a 2 to 1, right? And that will be my execution. Now, my follow up plan is this. My follow up plan is if you go to the weekly time frame, you will notice that the 100% of the on the weekly time frame, meaning the beginning of the pullback was right here. So my overall take profit should be right here, 1.18000. This is my overall take profit for this trade, right? But you have to also come to understand that these right psychological areas right here on the daily time frame, they have been used in the past, meaning it will cause it will cause a turmoil in the market. Something will happen. Basically, that's what I'm trying to say. Something will happen. Now, for me to be able to avoid unnecessary losses or give back the market what I have already gained, I need to open my eyes and watch out for reversal candles. I have said this, like I said before, watch out for candles like this. This is a hanging man right here. Watch out for candles like this. They always pop up. Now, the moment they pop up, you need to understand that the market is about to reverse. You should get out. So this is my contingency plan for this for 1.1700. This is my plan. When I see that, I'm going to be able to adjust and react and get out immediately. But if I do not see that, right, and the market decides to just keep on popping, huge candles, right, I would expect a break, a retest. And before I execute the next trade, I would close half of what I have had open from here so that I can now have, floating profit to risk for the next trade and then hold all the way to this, to this 100% on the weekly time frame and then close totally. It depends on how you trade, but this is my plan for the trade, and you can see how I'm able to make certain plans in place, put certain full stops in place, punctuations to be able to help me avoid giving back what I've won. to be able to help me avoid taking unnecessary losses. Because trust me, unnecessary losses happen every time, and those are the things that actually slow us down from becoming as successful as we desire, right? So very very important in this case, to follow the plan. I've made my plan and I'm sharing my plan, right? Your plan may be different, but it is very important for us to both have the same direction at heart. My plan may be different from your plan, right? But the most important thing as traders, is that our directions are the same. You're looking to go up, and I'm looking to go up. You're looking to buy the dollar, euro dollar this week. I'm looking to also buy the euro dollar this week, and this is what helps. This is how it's supposed to be. We don't have to both have the same strategy. It's not something to exit or entry strategy. We both do not have. We do not need that. But what we need is to make sure that our directions are are the same, are similar. And that's it for this week, right? It's nothing too much. We're not looking to come on here and talk and talk and talk and just speak out of turn. No, we're looking to drop the most intricate and the most important ideas, so that we can both grow, and go on with our lives, isn't it? So that's all for this week. Just follow your journey plan. I've made my plan. I'm sharing my plan, and that's it for this week. So have a great week. Ciao, ciao.